Hi, everyone. Welcome to yet another episode of Disruption Talks. Just recently, we noticed that actually it's above the 30th episode that we've reached. So just wanted to thank everybody involved so far. But other than that, I wanted to tell you that with each episode, I am learning because I have to prepare myself. I have to do something called research. I have to understand the questions that I'm asking. But with some topics, and it might not be that much of a challenge to invite a speaker who's smarter than me, but with this topic, which concerns the compliance in finance, this is an episode where I will learn as much as everybody in the audience listening to the answers. Because when you think of things like KYC or AML, of course, these are abbreviations that all of us heard one way or another, perhaps in the news, perhaps in our daily life of work. But still, I think there's a lot to be discovered in terms of that. So joining us today is none the other but Arshi Singh, the head of product at Comply Advantage. Hi, Arshi.
Hi, Philip. Hey, everyone. It's good to be back talking to Disruption Talks.
Yeah. This isn't your first interaction with Disruption, is it?
No, the second, but the first virtual one.
First virtual. Here's crossing the fingers genuinely to being able to do that once again on actual land with an actual handshake, right? So what we usually begin with is a short personal introduction, slightly mixed in with what does a day in the life of, in this case, head of product look like. So perhaps just before that, elevator pitch of Comply Advantage. What are we looking at? What's the story there?
So Comply Advantage, it's a in the reg tech space. I'd say we split them into a data provider for compliance purposes, a provider of information about individuals or companies across the world. What we're building is a connected database, and then building some solutions that help solve financial crime. Solutions like you mentioned, KYC, onboarding or transaction monitoring, transaction screening.
Okay. So I'm going to question you more and more on that later down the line. But now back to the short personal introduction. If we could begin of Arshi and then Arshi as the head of product at Comply Advantage.
Sure. So I have 17, 18 years of experience. And if I had to break down my experience, I can easily break it into three different sections. The first section being technology. I started, as a software developer back in India. And then the second section would be finance exclusively. So, that's when I moved to the US, went to business school and started working in corporate finance, FP&A, M&A, corporate treasury, exclusive finance things. And then
sorry, you just mentioned M&A. That one I know, but the one before FB&A, what was that?
Financial planning and analysis. So that's your quarterly reporting, the quarterly cycle at public companies where you talk about your earnings, profit loss. Okay. So hardcore corporate finance work, then mergers and acquisitions and treasury, and that sort of eventually, I've moved into the third section of my career, which is at this point is the longest one, about 7-8 years, and that's where both these finance and technology merged together into fintech. So yeah, fintech is feels like home to me. I've worked both at large institutions, large banks like JP Morgan Chase, as well as startup and scale-up stage companies. So prior to this, I was at Currency Cloud, which is in the cross-border payment space, and having worked in fintech, as a money transmitter, I was very closely, working with compliance because it is a heavily regulated industry when you're moving money around across the globe or converting currencies. And so, yeah, always exposed to the world of compliance and how we, understand our customers, do the KYC, know your customer, know your business, how we do the sanction screening, and how we, do the monitoring. And that's essentially what led me to Comply Advantage now. And to answer your second question around my current role as the head of product for one of our business lines, which is transaction monitoring and screening line of business, my role is essentially figuring out how we unleash the power of technology to solve this financial crime. Um, Using artificial intelligence or machine learning, bringing the usage of more sophisticated technology, and applying it not just to make money for ourselves. That's always a good thing for the company, but also for a good cause. We're catching bad guys. We're solving this problem of crime or funding of terrorism or human trafficking. So there's a bigger cause, and I think that's what's really exciting about this line of business and keeps me motivated.
Okay. If you can share some stories later in the interview, I would love to hear something about those more action movie like elements that you mentioned, like crime or such. But um, uh, just like you mentioned, fintech is sort of inevitable. You cannot really escape it. I think there was a blog post and a podcast by A16Z, the Horowitz fund, that every company is bound to be a fintech eventually. So I think that that's just going to be the common denominator of any company that is digital, i.e., any company. Especially that with the problem that you're solving is a difficult one, because many a times we see technology being able to transgress the problems of before. But here, whilst we have growth at scale, just like cybersecurity is experiencing a boom, because the more developed technologies we treasure in our day-to-day lives, the more exposed we are to risk. And likewise here, the more ways we find to transfer money, share money, invest money, especially with cryptocurrencies as well, the trend is that, it's like a hydra from the Greek mythology. You cut off one head and then you have three coming up, right? So there's a lot of things to consider, both on the execution side as well as the sort of customer friction element, right? So really interesting topic. And if you could tell me, how is Comply Advantage different from the rest of the industry? Because to complete technological ignorance, perhaps I shouldn't be saying this working at an IT company, but I mean the actual technological expertise when it comes to developing things like what you are doing. How exactly does it differ? For me, I hear all the letters, all the abbreviations. I am slightly lost. Help me find my way.
Comply Advantage covers two sides of that spectrum, right? So the first problem, when we talk about uh, what we hear from our customers, the problem that are usually our customers, the target ones for us, are the compliance officers at fintech companies, and they are struggling with keeping up with the constant pressure from the regulators of solving of staying on top of the different regulations, and each jurisdiction across the globe would have their own set of requirements. So the compliance officer, who are liable for that, and they can go to jail if they don't comply with, if the regulators catch them not complying with this. They're constantly having to balance this pressure with the pressure internally coming from the business, which is around growth. The commercial teams and the business wants to grow faster. They want to serve more customers or more segments or newer business models. And so we are really trying to solve for the problem of that compliance officer, make their lives easier. And how we do that, like I was saying, there's two-pronged approach here. The first is around giving the right data, because if you want to do all these sophisticated things, understand who your customer is or do some sanction screening, you need to have access to good quality data. It has to be wide-ranging data. If we're talking about the global business in today's world, every company is connected. They're doing business with other parties across the globe. There's a lot of cross-border, commerce going on. And so you can't just have data concentrated in a certain geography or just from the developed part of the world. You have to have wide-ranging data that covers all economies, emerging markets, all countries, different languages, and then also the timeliness of that data. So while to your question around how ComplyAdvantage is different, I would say that while there may be other larger incumbent players in our space, in the RegTech space, who do cover a lot of data and have access to data from different geographies. However, how are they making it accessible? The usage of technology, the APIs that we enable, and the timeliness of this data refresh that we do within, say, for example, sanctions data, which is published by different governments or regulators across the globe. That data is something that we refresh within minutes. So let's say that new bad actor was identified by the US and got added to the list. Within minutes, we would have it in, and we would start screening and giving the results to our clients based on that. So I think often that gets ignored. The coverage of data is highlighted, but the frequency of update or the timeliness of update can make a huge difference if it's within few minutes to within few weeks. You could go for weeks or even months sometimes not having the latest refresh of that information. So that's where I think one element of our competitive advantage comes from, because we are pretty much the first global company that's building this connected database of people and companies across the world. And then the second element is, what do you do with that data? If you have good quality data, to use it, you package it up and give it to customers in tools through which they can solve this financial crime. And those tools are some of the terms that you were saying before. They could be onboarding, KYC or KYB, or sanction screening or transaction monitoring. So the tools, the UI, the front end to be able to do that, those sophisticated tools are the other thing that ComplyAdvantage has built on top of its underlying data.
So what I am hearing as sort of this explain like I'm five kind of understanding of the topic, as I allowed myself at the very introduction of this interview, it's pretty much, in the most layman terms, like an antivirus, like a Swiss Army knife antivirus that protects against the ones who would otherwise be open to committing crime on the financial spectrum.
Yes. So let me break that down. On the well, there are a lot of elements in compliance world that that you can solve for. Fraud being a key one, or in general credit risk, assessment of credit being another one. I'll focus on the two key areas that ComplyAdvantage is focused on, and those would be in the AML space. So it starts with first knowing your customer. Any entity, and you mentioned that soon in the future, near future, we'll see every company being a fintech company, everyone having embedded payments within their system. When we get to that stage, you pretty much every company would then be liable to comply with the money transmission regulations, which means that you need to know who you're supporting, who you're paying money on behalf of. The customer that you onboard is who's that customer, what exactly are they doing, and how do you make sure that what they tell you is accurate. One, your customer should not be anybody who's on a sanctioned list, and sanctioned lists would consist of various individuals that different governments want to monitor closely. Could be terrorists or other bad actors. So you want to make sure that you're not serving those types of customers. Then beyond that, there are also some politically exposed people. So these could be the heads of different states, or people who have access to or are close to these heads of states. And that's another set of data. It's called the PEPs, the politically exposed person data. You can track it at different levels. So the level 1, which is purely the head of states, is easy to access. But then you have level 2, level 3, and the more you keep going down, it gets to more local level officials, having enough data on them, and not just on the person in power, but also any related people, their spouses or friends who could have an influence on them. So being aware of those types of scenarios. And then thirdly, just you want to know if you're serving a certain person as a customer, or even a company, is there any negative news about them? And typically, compliance analysts would just go and do Google search on to figure out what's going on. But having good automated tools can make that job a lot easier for you, so that you don't have to spend your own time and effort in doing that research, but you have these automated tools that are able to track billions of sources of data, multiple websites across the globe, to tell you any adverse media or any negative news about that entity, either a company or a person, and you can make an informed decision of whether you want to serve this as you want to onboard them as a customer or not. So that's one part of it, onboarding the customers. Now, once you've onboarded them, you also have the obligation to keep monitoring the activity they're doing on an ongoing basis. So, say for example, customer that you onboarded, they may be a supplier, or making supplier payments to, say, China. But if suddenly, while monitoring that, you start seeing a big trend in payments going to a new jurisdiction that wasn't originally disclosed to you, or the amount of funds flowing to some other place are suddenly shooting up, then that's something you want to watch out for. You want to monitor for these types of deviations, these trends, because they are sort of indicators that there's something suspicious happening here. Or I could give you an example of, there is a simple example of somebody who called themselves as a marketing agency, and you would see payments suddenly growing to that one beneficiary across multiple, one individual across multiple customers. Suddenly payments start increasing, and worth millions of dollars payments going into a marketing agency. And when you dig a little further under it, it essentially ends up being a porn site, or something to that effect, and could lead to human trafficking behind it. So that kind of diligence is something that the government and the regulators are expecting financial institutions to do. Now, and where they find any lapse, there are huge, massive fines that are being, levied by the regulators today. Every year, you see, large banks being fined for lack of, good quality oversight on that. And so yeah, that's just to give you a flavor of what kind of money laundering activity you want to track, and how the onus is on the financial institution to make sure that they are tracking this, not just tracking it, but also the requirement is then they report it to the regulators. Wherever they're seeing trends that could be suspicious, they are required to notify the regulators through various formats, suspicious activity reports, and if there is any lapse in them doing it in a timely manner, and it gets caught by the regulators, then again, there could be penalties and fines imposed on them.
Arshi, I have to tell you, I asked for an explanation like I'm 5, and it's worked so well that I actually feel like I'm 5 years old. I feel so young after explanation. You've broken it down extremely well and in a very digestive manner. And actually, here's a comment that's not a question, but it is a shout out from Joe, who calls you a sage, who says that you make total sense, and who says that your previous company misses you. So it's not my biased opinion that you have just explained this excellently. So Joe, thanks for that. Thanks for that kind comment. So, since we've established that this is a Swiss Army knife approach, more or less, just for the sake of the next question, is there a moat? Because you mentioned incumbents, and incumbents have the benefit of size and being able to throw money at a problem and say, we already have the existing infrastructure, let's build on top of that. So you just told me how you are sort of defending against them. They just are not those steps ahead to be walking side by side with you. But what about other companies that are not from the incumbent, but more from the neo space? Like we have neobanks, neo insurtechs, neo compliance. Is there a moat? Is there a killer feature that makes sure that no one steps in the way of Comply Advantage?
Comply Advantage, we've been doing this for 7 years or so now. So yeah, I'd say we're in that stage where we beyond the startup now in the scale up stage, and there are advantages that you have. Being a younger, more agile company, you would be able to move faster than some of the incumbents. Just the fact that your tech stack isn't is newer. You're not burdened with legacy infrastructure, legacy systems. That's a key advantage. And in general, I mean, across any industry, fintech or a regtech would have that over the incumbents. Where I think where we are slowly, gradually making space is in the branding. Being having an equal voice, having a brand that is recognized, and that as our customers are growing themselves, and as we also win more and more of tier one customers, I think that will happen automatically. But yeah, and with that comes sort of awareness that regulators are aware of us, and they have more confidence in the tools that we are creating, which obviously helps our clients as well. But then there is also constant threat of newer startups coming in and doing it much faster than us. So we have to strike the right balance. As any company that matures, we have to make sure that what technology we built a few years ago is keeping pace, and it's able to scale with the scale of our clients. So there's constant investment in technology to make sure that we are revamping our systems, the architecture, the design, to keep it scalable. At the same time, we want to be nimble and not lose out to the newer, younger competition. And so we have a constant check on that. And when it comes to say how do we stay one step ahead, it's just looking at new ways of doing these things. So like I mentioned, the usage of artificial intelligence, we've incorporated that into our adverse media, and we've been using that machine learning to empower our sort of tools on the onboarding and monitoring side. And we're constantly looking to make more and more use of that, even in the transaction monitoring side, where just a few little terminology from the industry, but how our compliance customers would think about the problems is they want to balance the risk but also keep it efficient. So balance the operational efficiency with their risk mitigation. And so based on whatever their say risk appetite is, if we are generating a whole bunch of noise around that, that we calling a whole bunch of alerts is something that you would say this is suspicious, this needs you to look at and review, and every suspicious activity, investigation of that activity is time and effort. So how do we make sure that we're doing it in an optimum way and the most efficient way? Because our customers, they can have a human-centric approach, but they can hire a whole army of compliance analysts, and they will sit and review each and every activity that we present to them, and investigate it and close it out. But the trend towards in the industry, sort of the direction where we're moving in, is to use more artificial intelligence so that we can reduce the work that these human, the compliance analysts have to do. And that's essentially doing a few steps in the process with the usage of artificial intelligence, and thereby reducing the noise in terms of what we raise to them. If let's say we were raising 100 different suspicious things to them, we want to reduce that noise and make it be able to close say 90 of them through the usage of artificial intelligence. And wherever regulators allow, because different regulators treat artificial intelligence differently. Some look at it with suspicion. Wherever regulations allow, we would close them, or we would help prioritize the work for the compliance analyst and present all this. It's all about how quickly we can assimilate the data and present it to them so that it makes their job much easier. What would take an hour for them to investigate, if it's presented in the right way, all the information is easy to navigate, it's all within one crisp report, then it reduces their work from 1 hour to say 10 minutes, or what would take 10 minutes can be done within 1 minute. So that's our goal, and I think that's where the industry may be headed. A lot of newer, younger competitors we see in this space, they are focusing on that, and they have a very niche focus. But we want to incorporate this with the rest of the solution and the data that we have built in house, so that we can continue to stay on top of technology, but also do it at scale with our more mature customers.
Especially that I think what sort of positions you in this very very attractive space, considering the dynamic between the incumbents, is that the incumbents are Titanic. They cannot just switch like that, like a jet ski. But you can. The incumbents, too young to have the holy grail that you are holding, which is the data that you have amassed. So I think that data, correct me if I'm wrong, but I think that is also something that sets you those 7 years that you mentioned apart, which simply I'm supposing that it cannot be somehow bought or overran or just outsourced, the conclusions and all of the outcomes that you have predicted. Thanks to that, no one can sort of buy themselves that time, right? Can they?
Yeah, that's true. I mean, there's heavy investment that's already gone in, right? So there is if somebody was a new player in the industry was looking to build all that in house, it would take time to build it all together. Or the other option they would have is to then partner with someone, not get the full data built in house. Use somebody like us, use the data layer from Comply Advantage, and build their own solution on top of that. But then it's not attacking the full problem holistically. They're picking and choosing what niche areas they want to tackle. And despite that, despite all this, I mean, there is still it's a big industry, and there is still a gap in the industry. The various I was reading some reports, and there are various estimates around what sort of estimates on how much money is being laundered, and they say anywhere between 800 billion to 2 trillion is being laundered, US dollars worth is being laundered today, which is huge, right? It's a big percentage of the global GDP, almost 2 to 5% of the GDP, and it's going undetected. So there is clearly a big gap in the in-house solutions that some of the larger firms, the banks, have in place. There's a lot of investment they've been doing, but there's clearly something that's still not working for the larger companies in the space. And that's where I think that's where there's a lot of room still for companies like us, RegTech firms, to build more sophisticated solutions and tackle this real problem.
And that sort of takes me to the next approach, the theme that I wanted to impose on us, which is the future, looking towards the future. So the key challenges that you are facing right now, but also that the industry might be facing right now, because as I understand it, I would see the following fronts. I would see that there would be increased customer friction. Like, the more meticulous the KYC is supposed to be, the more the last letter, that C, is sort of being subjected to the meticulous, necessarily meticulous, but still research and backing it up. The ever increasing compliance costs. Am I missing something? You mentioned keeping information up to date. That's something that you're already sort of checking off. But what about the two first things that I mentioned? So the ever increasing costs and the friction that is at the end of the day on the person who wants to do something with their money.
Yeah, so ultimately, I think there has to be a risk-based approach to doing this, right? So the cost, you have to balance both things. And it starts with say the company defining what their risk appetite is. any company, a financial institution, or fintech that's in the money transmission space would in order to to transmit the money, they require regulation, and they're required by regulators to they're given licenses by regulators, and that automatically means they have to comply with certain things. So it all starts with them defining what their compliance policies are going to be, their AML policies. And depending on their risk appetite, they can classify certain geographies as risky, entire regions as risky, or certain industries as risky. Example, like gambling, you may call that, or gaming. Even online gaming is a gray area. Some companies may even qualify crypto exchanges as risky. So depending on each company's appetite and what where they're headed, once they have that defined, then it's about the operational side. How do you make sure that you have the procedures, the processes in place that allow you to execute on whatever, or implement that policy that you have, to do that in a desired manner. And that's where I think the tools, compliance tools like us, come into play. Because yeah, at the end of the day, like I was saying, it's a data problem to solve. To keep it operationally efficient, you can either have that human centric approach, so keep hiring more and more compliance analysts, and there are obviously cons to that approach. If as your company is scaling, as your volumes are growing, you cannot just keep hiring and scaling your compliance team the same way. One, it's not cost efficient, it's not sustainable, and two, relying purely on a human based approach is also prone to it's prone to errors, it's prone to biases. No two individuals would treat the same thing the same way, or even a same individual on two different days, they might consider one thing suspicious, and on another day they might not. So there is that human uh, anytime you do these sort of judgment things manually, there is that element of human bias coming into play. And so the other alternative is to use technology and make it more tech centric approach, in which case then you use tools, sophisticated tools that either automate some of this process, or at least automate the gathering of data and the presentation of that information for the last step to be taken by the analyst. And like I was saying, before, if we can reduce the amount of time it takes for an analyst to investigate something, and if they find it suspicious, then the amount of time it takes for them to report that activity to the regulators. If we can reduce all this through the use of artificial intelligence, or the tools, any other sophisticated tools that we're working on, then then we've achieved that our goal or our objective of making sure that the human beings are investing most of their time in real activity that could really help them catch the crimes. Today, a common problem in the industry is the amount of false positives that get generated. So there's a lot of noise being generated, and you can imagine if one person has to look at 100 different things, the amount of focus that they would be able to give them is going to be a lot less, as opposed to if they only have to look at 5 different things, then they can purely truly investigate, do their full diligence on those 5 things and be able to catch crime. So it's about focus, and we want to take all that noise away and make sure that the analysts are spending most of their time on the real activity that could be suspicious.
And what you're saying makes sense, because I mean, cost inefficiency is just like a side negative effect, but the main one is what you just mentioned. Like, I don't want humans to be establishing such important things as KYC or AML. I want an algorithm, and once the algorithm says, I'm not sure, that's when I want the human to step in, because just like you said, the element of human error, of how I'm feeling today, of whether my breakfast was good on my stomach, all of those small things that compound, that give you that margin of error. But with scale, that margin of error just keeps compounding with every other human being added into the mix. So absolutely, I completely agree with you. But now I want to jump into a topic that should be interesting for even people who are non-technical. So the crime aspect. You just told me a second ago that there is a significant amount, a substantial pile of cash that is not being spotted when it comes to anti-money laundering. So maybe I'm not getting something, but on a philosophical note, how do I know that which I don't know? How do we know that that money has been laundered if we have allowed it to be laundered? Like, is it some sort of survivorship bias conundrum that my brain can't figure out? Or how do we know what is the money that went unnoticed in order to be able to actually quantify it? How much we didn't notice? How does that work?
I don't know how they came up with these estimates. So it's a good question because unlike fraud, like fraud is easier to detect because within a week or 10 days, you would know the person who's been who's the victim would call out or would say that there's money from my bank account that's gone or my credit card that's gone, and for a fact with certainty that this is what was fraudulent. With money laundering, you don't have that certainty because nobody's going to call and tell you in some time that this was money laundering. And an analyst who's doing this investigation, making a decision, and saying, okay, maybe this is not suspicious. I'll let it go. There is no way to know for sure that what you let go as good activity was essentially bad. And the best evidence we have of that is when once in a while when the regulators catch these financial institutions and they get fined. And usually it's the large ones, right? The larger banks that you would hear more about when they get fined. I think in 2020 alone, there was 14 billion worth of bank fines that globally different regulators applied. And most of these tend to be in the AML space, anti-money laundering space. Some of them are also in the KYC or maybe data leaks, of personal information. But they're very heavily skewed on anti-money laundering, and I think that's the most real hard evidence we have, where they have found lapses in compliance or breaches. And US regulators tend to be most active here. UK regulators as well. European ones in Australia. It's the trend is catching across the globe, but yeah, historically US and UK regulators have been most active. Last year alone, 2020, there were 12 US banks, JP Morgan, Wells Fargo, Goldman Sachs, for various lapses. They got fined. What we are hearing also from our customers is that the number of suspicious activity that they are reporting to regulators, that has actually increased in the last 1 year or so since COVID times. So there is, in general, we know that the trend towards digitization increased because of the pandemic, and the volumes of payments or even cross-border increased. Certain sectors less so, say travel got hit, but then there are other sectors, e-commerce, that really boomed. So it's probably the function of more and more digitization of payments and money moving, that the amount of suspicious activity through these channels is also increasing, and that's why that's the closest evidence we could have of where there have been lapses. But yeah, I agree with. Otherwise, it's hard to know. Money laundering, it's not black and white.
It's not supposed to be. That's not how they make it, right? So we spoke about this. Now let's expand the spectrum. And I want to polarize this with an example. So we are living in the times of definitely new problems, perhaps not fundamentally new themes of issues, but new problems that we have not had before. Number one, we have never had such an abundance and financial maturity when it comes to cryptocurrencies, to the tune where one of the richest people in the world sensed the market cap of Bitcoin itself just crashing with a single tweet. We are living in the times where there is a ransomware group. They're called DarkSide, and they attack the East Coast pipeline of the U.S. And then actually they say that they have a code of conduct, that they are honorable, that they apologize for actually targeting the pipeline. They say they would never target a hospital or anything that would be a very vulnerable space. So having this polarized example, I want to take it to compliance, back to compliance. So the future of financial crime, what is going to be something that I'm not even seeing today because I could not imagine the things that I cannot foresee? What do you think is going to be the future pirate of financial crime?
We don't know what we don't know, right? So
Yeah.
I think uh, there is just huge amounts, massive amounts of data that is being generated in today's age of information technology, and it's about being able to consume that data fast enough. Uh, we uh, just on the internet there are massive sources of information, new websites and news being generated across the globe. Tens of thousands of websites where anywhere some suspicious activity or something gets reported. And I think our as a as a company that wants to kill this financial crime, or provide best efficient tools to eliminate this, our job is to stay on top of that and be able to consume this data as it gets reported anywhere in the world. And we have hired a whole bunch of data scientists who are working on this problem, who are looking at how we consume data from these tens of thousands of different websites on a daily basis, and extract the insights out of that uh, through sophisticated algorithms, machine learning, um, and be able to present where any bad news, or some of the examples that you were giving, if they get reported in a local website, local paper, we should be on top of it and be able to elevate it, and show it to our customer that this is something that's of alert. And ultimately it's their decision, how they weigh it. What we want is to be able to extract that and make sure, one, that we doing it accurately. And as you can imagine, uh, when it comes to different languages, the kind of algorithms that you use to make sure that you're not pulling in an incorrect name or incorrect actor. um, there's a whole bunch of investment that we put into our screening and matching logic. um, it's I guess your name is a good example, right? FILIP. I mean, an alternate way to spell it is
Yeah. Yeah.
PHLIP. So how do we take that into account? Different, say, transliterations of names like that, or any kind of I mean, aliases, Bob instead of Robert, or Will instead of a Bill instead of a Williams. So these are just some basics of how you do this matching. It's not always an exact match. You need to have a fuzziness logic, and constantly giving the tools to our customers to tweak this. They should be able to tune it based on uh, what they want to catch, and what their capacity is. Because if they make it too loose, then they're going to see a whole bunch of noise being generated, which could then inundate them, and they won't have enough capacity to detect all this. So it's constantly trying to strike that right balance, where we don't want to create this extra noise. So how do we make our algorithm more and more fine tuned, so that it's really going after what you consider risky? And different segments have their own different definitions of what risky is, right? So you were talking about blockchain, crypto. That obviously that's a big segment in itself, and it's a key big segment for us also. Um, the regulations in that segment are only going to increase. Already, I mean, I don't know how many people understand this, but there are already regulations that apply on crypto exchanges and blockchain firms. In the US, they are the US regulator considers them, even though the cryptocurrencies aren't recognized as legal currencies or legal tenders, but they by the regulators, but they're still considered equivalent to money transmitters. And so all the regulations around sanction screening, having AML processes, procedures, and reporting any suspicious activity, all those obligations apply to a cryptocurrency or blockchain exchange as well. And so being able to do this for this whole new growing economy is a key area for us. Historically, we focused on the fiat currencies, but we are actively looking to incorporate even the blockchain and the crypto side, so that we can do that full end-to-end monitoring across both fiat and the crypto world. And I think, yeah, with, as you said, we were seeing a whole rise in this segment, and so many companies focused on this, that regulators can't afford to ignore it. UK regulators are looking at it across the world. Different regulators have started focusing on specific regulations around this space. And yeah, it's for tech companies like us to ensure that we also stay on top of that and bring out appropriate tools to cover both sides, fiat and cryptocurrencies.
I want to reference three things that you mentioned. My name, sure, it's spelled differently in Polish, in French, in British English. It's a American Phil versus a British Philip. So there's a lot, but these are differences in letters that can be figured out. But think of all the systems that don't recognize Unicode, and you have Maria versus Maria, and all of that can already be such a small thing that even someone that's diligent might miss that. And what you mentioned about crypto, yes, especially with Uniswap, right? Because there you can create the dependency between an actual dollar and a digital asset. So that already will be a new set of problems to unpack. But also, at the end of the day, even crypto is just as strong as the software is, because the missing link is the human. As we know, with Silk Road, they were able to identify the people behind it due to their lack of diligence and being extremely cautious when dealing with their finances that were not connected to Silk Road. It's very easy, very easy, absolutely not, but it's doable to connect the dots that are not exactly connected to what you are doing in the sort of shielded blockchain or crypto space. If you make a mistake, that's a simple social engineering feat for anybody who's on the investigative run trying to discover what you do. I need to be a little bit of a time policeman because we have 11 minutes and we have some extremely good questions from what I'm seeing. So I want to make sure that we measure our questions and then address those in the comments. So one thing, we do this from time to time. You mentioned that you just hired a lot of data scientists that you're hiring. Is there perhaps a shout out to anybody from the audience who's looking? Are you hiring data scientists right now? Anything like that people watching this might want to apply for?
We're constantly hiring. So yeah, I mean, anybody on this call, you could go to our website or on LinkedIn and look at the jobs. There's a lot of hiring that we're looking to do on the tech side, developers in the product teams. So there are lot of hiring that we need to do. We're in the growth phase, growing. With the last round that we announced. There is massive plans, growth plans across the board. So yeah, including on the commercial side as well. But yeah, anybody who's please do look at our website or our LinkedIn pages and look at the job opportunities, and we'd be happy to talk.
And whilst you're on the website, make sure to check out the acronym buster, because it can help somebody like you, like me, to, wrap my head around a little bit what's going on with all those acronyms and abbreviations. So I'm going to ask two questions, then I'm going to hand it over to the comments, because these are slightly more technical than usual questions. So I guess they will warrant a longer explanation as well. And these are the two questions that we always ask our guests. Number one is, what is your decision-making framework? Can be as broad, as specific as you want, but anything that helps you get through the day, like a rule of thumb. Say, the simplest way to draw an example is cake. Is it good? Absolutely. Is it good for me? Not sure. So could you give me something that works for you like that in your professional life when dealing with decisions concerning product as a head of product?
It's classic product, right? It's down to prioritization. And time management. If you're talking about a single day, what are the other strategic things that I need to look at? What are the more tactical things that I need to address? Allocating time across those. And I'd say always going back to our long-term view, having well-defined metrics upfront, that this is the strategic goal. These are our North Star metrics or KPIs through which we would gauge our performance at the end of the year or at the end of the quarter. If you have that in mind, and you weigh everything with the lens of, is it helping move that needle, then I think the decisions become a lot clearer and easier. And yeah, some decisions, sometimes you may not have all the information, but some decisions are not irreversible. So it's prudent to not spend too much time on them. If you can easily change gears down the road, then make a call, take any call based on your gut and move ahead. But there are other decisions that may be required more upfront diligence. So knowing which decision is what, it also helps save a lot of time. Don't spend too much time on a decision that can easily be changed down the line.
So a healthy dose of analysis paralysis, but not too much, essentially. Pretty much. And the second question that we ask is, I hand over to you the remote magic wand. You get to abracadabra it, and every 12-year-old on the planet is suddenly educated with what? You tell me. We've heard emotional intelligence, financial prudence, design thinking, systems thinking, all of those. And you can obviously say what I've just mentioned, one of those again, but I want you to make it yours. Why is it that you will choose what you will choose?
Coding. I did start as a software developer myself, but I think it's the language of the future. We're not just talking about artificial intelligence, but machines would play a bigger part, and being able to talk to them, just like we need to learn language to talk to humans. If machines are going to do a lot of work and computers are going to do a lot of work, then we need to know the language to talk to them. So yeah, I'd say I have an 8-year-old, and she's learning basics of coding. But yeah, I would say every kid should get on it early.
Loving it. Absolutely loving it.
Not to say that, just be a geek and be in front of your computer. Do everything else, have a balance, do your outdoor physical activities and whatever is of your interest. But it just like, knowing new languages is or learning multiple languages, it helps, your brain develop. The same way, I think learning coding language is another way to just have your brain be more logical, and whether you do become a coder or not, that's different. It just helps you think logically and critically, which is a key benefit for the future.
Absolutely, especially that it's a little bit like the product life cycle. You have the early adopters. At the end of the spectrum, you have laggards. So at some point, it's not even going to be, what is the benefit of me knowing a coding language or just the underlying logic under it? It's going to be, can I afford to not know that? Like as a doctor in 5-10 years, I think it's going to be much more difficult than just going through the years and years of studying of the anatomy. That might be actually reduced to something simpler, because the machines around you might give you a better idea of each bone, each muscle fiber, and so on. But you will need to be able to interact with those things. So absolutely spot on. And now on to the comments. So we have one from our own Kasha, and she asks about a cashless society. If there is no cash going around, if everything is digitized, KYC AML is its existence still validated?
Well, cashless means everything is digital, which means it's all the more relevant. Then yeah, in a cash-based society, you don't really know who you're dealing with or what their background is, other than you just seeing their face. You walk into a store and they know nothing about you. But if it's all digital, then it becomes all the more relevant, and all the more doable. In that scenario, to be able to know who you're dealing with, to do that full end-to-end tracking.
And
Um,
I think that's exactly Kasha's point, that it's so like if everything is digital, then you are cornered as the person who would want to do some money laundering. Will it be simply so well connected? Like if I am in a room and there's a camera and there's not a single blind spot, will I be committing crimes? Probably not.
well, I don't think like a criminal, but I'm sure people will. There is money laundering that is happening through, despite all the regulations that is going through, banking rails and banking channels. So the key is that companies like us have to think one step ahead and be smarter than the criminals, because yeah, I'm sure they'll figure out ways. Uh,
Okay, here's to fighting the good fight. Uh, Raghavendra, hopefully that is not a mispronunciation on my part, says, great explanation on KYC and AML in this sector from you. We drive fraud areas in advanced analytics. How far is the change from rules to advanced machine learning ongoing in industry and clients, and the use of such techniques by Comply Advantage?
Obviously, the usage is more developed in the fraud scenario. In say AML, it's been historically it's been very much static rules based approach. But the switch to machine learning and usage of AI is the need of the hour. We are actively working on it. We have a lot of innovation going in the company, um, um to do something that's been done in fraud already. And like I was saying, there's a challenge because unlike fraud, you don't have as much insight with AML. You don't know for sure. So it's going to look slightly different, but it's a key part of our strategy, and that's how we're looking to differentiate ourselves from some of the other players.
Solid one. I just want to ask, because we are allegedly 1 or 2 minutes away from the time where we usually end, but we have 3 questions from an avid question asker, and I think that you will like them. So is it okay with you if we run over slightly the hour?
Sure.
Okay, so question 1 out of 3 from Martin. Martin, thank you so much for participating in the live stream. He says that we already have market solutions like NetReveal or Actimize, shout out to those names mentioned here, that are using AI to eliminate false positives or the need for manual work. And though those solutions are created for big financial industries, are you, as Comply Advantage, focusing on perhaps the smaller players that don't have the budget or the infrastructure warranting the solutions that were just mentioned?
Two things I would say to that. One, yeah, the companies you mentioned, they are using AI. Despite that, there is a gap in the market. So there's always room for enhancing or improving the application of the technology. So we close in on those gaps for the larger players, the big financial industries. But yeah, to your point around the smaller players, absolutely. As Comply Advantage, our target customers are, a lot of them tend to be in that tier 2 or fintech space, startup or scale up phase, and we absolutely want to keep them included by offering affordable solutions for them as well. In fact, we recently launched something called Comply Launch, which is essentially a free version of our offering for new startups. And that's getting a lot of traction. So any new company, that's just wanting to get off the road, they shouldn't have to spend a whole bunch of money or worry about how they comply with regulation, or so we are offering our solution for free uh, to help them get started, and then they can grow. As they grow, they can get the more sophisticated version. But yeah, we want to target all players, the smaller players, tier 2, tier 3 companies.
2 out of 3 from Marcin. Taking under consideration that you will gather information in local sources, how can you be certain that collected data is not quote unquote fake news or a name coincidence? Did you consider validating sources or creating a valid source list of data first? Something that we slightly touched upon, but I think I feel that Marcin's question is slightly more elaborate than what I asked.
Yeah, I don't think I'll be able to give you an elaborate answer in this call right now. But yeah, to your point, those are the challenges. When we first came out with the solution, we realized that these are some things that we need to solve for, and those are constantly, the KPIs through which we measure the performance of those teams. That they are measured on these things, how to reduce the instances of name coincidence or fake news. Or sometimes we see age mismatch, but some news could be from 2 years ago, another news from today. So how do we solve for these things? That's I can't give you anything more than that today in this call, but yeah, those are challenges that we are facing and constantly looking to solve.
And now on to the last one from Marcin, and I think this requires a little bit of gymnastics from you, as to not say too much. But Marcin states that there are fines paid by financial institutions, and in your opinion, were they caused by a genuine lack of knowledge, technical support for AML, or silence allowance? I'm not sure what the last one means. Gut feel tells me that it's something like don't ask, don't tell approach. But yeah, the
I
question
think
goes to you.
we've seen examples across the board, right? Sometimes it's a mix of these, or different fines focus on, say, one of these, but they are focused on. Um I won't say lack of intent, but not having the right tools, or sometimes the right, um, or sometimes the right focus. So maybe you do have the tools, but you're not, tuning them appropriately, or don't have the timely access to data, to information. So yeah, I think it's down to the tools and the timeliness of how you're using the tools. Um, and for the legacy, for the larger institutions, it's not necessarily the intent, but it's just being bogged down by legacy infrastructure. So even if they want to move faster, sometimes they get held back. And it's a function of just not just infrastructure, but that could be uh, uh, just resistance to change as well. So there could be a human element there also. Just being, I'd say, there is a need to be more open minded, and be open to trying out different solutions, um, than looking to do things in house, because that's a slow process, and there's enough evidence to show that it hasn't worked even for the larger financial institutions.
So, Marcin, thanks for all the questions. And just like you heard on the last one, the horse would like to pull the cart really fast, but the cart was just not designed to go that quick. So, hope that answers your question. And Arshi, thank you so much for today. I really enjoyed it. I hope you did as well. And to everybody else that is watching this episode, we will be seeing you next week, hopefully, on the next episode of Disruption Talks. We're going to be talking about buy now, pay later with the CEO and founder of Zilch. So stay tuned. You'll be seeing posts all over your LinkedIn timeline, hopefully, from us. And we're hoping that you will come. And Arshi, once again, thank you so much It was a blast, and I am at least 20 times smarter than I was 65 minutes ago. So thank you so much.
Thanks for having me. Thank you, Philip.
Absolutely. So, like you heard, thanks everyone, and see you next week. Bye bye.